Everyone, this is Rob McDougall from Zhang Financial with your weekly economic update. Today is Monday, April 3rd, 2023. Last week, the economic calendar was fairly eventful. Started off last Tuesday with the consumer confidence number. That's the U.S. government's version, the conference board. That came in better than expected. The expectation was a 101.5 reading. It came in at 104.2. That was favorable. Then on Friday, we had personal income, personal spending. Both of those were solid. Personal income was as expected. It was a positive 0.3% month over month. Personal spending actually less than expected. It was expected to come in at a positive 0.3% month over month, came in at a positive 0.2% month over month, which should be favorable for inflation. Then the inflation numbers on Friday were both favorable. PCE and PCE core. PCE is personal consumption expenditure. That's the Fed's preferred inflation metric used for policy purposes. PCE came in at a positive 0.3% month over month, but the consensus had been a positive 0.4%. So that was favorable. And likewise, the core prices, PCE minus food and energy, that came in at positive 0.3% month over month, versus the expectation of positive 0.4%. So both of those favorable, despite the fact we had favorable inflation information. We actually had the probability of a Fed rate increase on May 3rd. That probability actually went up last week. So going into the week, the expectation or the probability of a 25 basis point increase on May 3rd was at 40%. That moved up to 58% at the end of last week. Also related to that, I would say, is that future inflation expectations for that also rose slightly last week. So the prior week, the 10-year break-even, 10-year Treasury minus tips, was at 2.19%, and it rose to 2.32% at the end of last week. So the last economic data point or item from last week, the Atlanta Federal Reserve, we always watch our estimate for GDP expectations. They actually lowered their expectation for first quarter 2023 GDP growth from a really strong 3.2% down to 2.5%. So in addition to the favorable news that I think that we had for inflation, we also got good news regarding the banking industry. First, early in the week, First Citizen Bankshare announced the acquisition of some of the assets of Silicon Valley Bank, which had failed a few weeks ago and set off a bit of a disruption or controversy over U.S. bank stocks. And then during the week, a Bloomberg report was circulating that U.S. government authorities are actually looking at various ways to solidify or to assist U.S. banks in shoring up their balance sheets. So that was good news. As a result of all the favorable economic news last week, and as I just mentioned, I think good news on the banking front, U.S. stocks were very strong last week. S&P 500 last week up 3.5%, and it may come as a surprise, but it was a very strong first quarter in total, with the S&P 500 up 7.5%. International equities last week, they were also strong. The MSCI World ex-US was up 3.86%, so slightly better than the S&P 500. And year-to-date, tracking pretty close to the S&P 500, up 7.22%. Now, conversely, last week, bonds fell. The 2-year yield fell 29 basis points, and the 10-year dropped 11 basis points. So for the week last week, the Bloomberg U.S. Aggregate Bond Index fell 0.46%, but did finish the first quarter up strongly, up positive 2.96%. This week, in terms of economic data, relatively light week. Earlier this morning, we had the ISM Manufacturing Index come in. It came in weaker than expected at 46.3. The consensus was 47.5. This is the fifth consecutive month manufacturing has been below the 50 level, which indicates manufacturing contraction. On Wednesday, we get the ISM for services. Services has continued very strong. There was 1 month, looked like an aberration. I believe that was December. But it was solid last month. It's expected to be solid again for the month of February, expected to come in at 54.5. For the month of March, the February reading was 55.1. I think the most important economic indicator or metric coming out this week will be the jobs number that will be on Friday. The job additions are expected to have slowed in February down to 239,000. The prior month, February, was a positive 311,000. And January, of course, was a very strong month of 511,000. So that is it for the economic update for this week. Thank you very much for attending. Hope to see you again next week. Thank you. That was a short one.